Let's go to CommSec. Tom Piotrowski is live for us. How are we looking today, Tom?
Pete, we're going to kick off flat, the futures are telling us at this stage. So not a bad outcome under the circumstances, given that generally the trend in the Northern Hemisphere was stocks being pressured and a grind higher where interest rates are concerned. So as we move into the final minutes of the US session, we've got the Nasdaq down by around 2.25%. That's where the casualties have been found on Wall Street in the tech sector, and we'll get to that in a moment. The S&P 500 down 1.5% and the Dow Jones down by 0.4%. So yesterday after the market closed, Pete, we spoke about the contrasting differences between Microsoft and Alphabet in terms of their earnings. And what has stood out was the very substantial marking down of Alphabet shares when they were seen to miss expectations in relation to the performance of their cloud computing business. This, of course, is seen as one of the turning points around AI. So that is part of the reason why the shares are down by as much as 10% in US trade. And that cast a pall over the tech sector in general. It just had investors pause to reflect on the incandescent nature of that sector around AI, what it means for cloud, the ability to deliver services via that technology. Microsoft, by contrast, didn't have the perceived blemish that Alphabet did, and that stock up by about 3%. In both cases, both organisations beat expectations in relation to their headline earnings. So it just goes to show you how hard-nosed investors are at the moment. Elsewhere, oil prices down up by around 2% to $85.39 US a barrel. Gold a little bit firmer at $19.94 US an ounce. The Aussie dollar getting marked down, Pete, surprisingly. So having floated with 64 US cents yesterday after those hotter than expected CPI figures, it's back to around 63.1 as we speak right now.
Okay, Tom Piotrowski, thank you so much.